So definitely didn't think that I would become a resident expert anywhere when it came to cannabis, but I guess here we are, and it's 2020, and 2020 has definitely thrown us a lot of curveballs. So I guess nothing is out of the question. My experience with cannabis started back in 2012 when I was a BSA officer working for a bank up in Massachusetts when they legalized medical marijuana. And at the time, although I'm not, risk adverse by any means, at the time, there was a lot of questions. Colorado had just legalized adult use. And so we were hearing a lot of talk about all the issues that they were having. So we were going to, as a community bank, just kind of take a step back and let everybody else kind of deal with it and see what kind of shakes out. Until I went to a board meeting to discuss it and found out that a board member actually had property that he was leasing to growers, and that we held a lien on it. So cannabis just kind of came to me that way. And then since then, it has changed so much, and it continues to change. Back then, it was just medical marijuana that we were dealing with, some recreational use. Now you're throwing in hemp and CBD. And so now we have this whole myriad of an industry where I think there's a lot more questions than there are answers right now, just because of the legal environment around it. So I think a good place to start is to just kind of talk about what I call know your cannabis. Here we go. Just to make sure, when we're talking about cannabis, we are talking about marijuana, we're talking about hemp, and then of course hemp produces CBD. So those are kind of the three. When we talk about cannabis related businesses, that's what we're talking about. So the main difference between hemp and marijuana, they both come from the same plant, cannabis, and that's why for a long time hemp was also considered illegal on a federal level, because it is the same plant. And so the stance was anything that's derived from the cannabis plant would be considered illegal until the Farm Bill of 2014. That's when we started to see hemp kind of be separated from marijuana. And of course, the biggest difference between these two is the THC level. So THC being, I think everyone probably knows what THC is, but that is the psychedelic that is present in marijuana. It is present in very small amounts in hemp, but it is genetically dormant in hemp, so it's really not produced the way that it is with marijuana. And on the flip side, with marijuana, you're really not getting a high extract of CBD there, and so that's why hemp is being grown to produce CBD oil. So I wanted to talk a little bit about some of the CBD oil risks. I know CBD oil tends to be a big question that people have because it is out there. There's a lot of stores that are selling it, from CBD exclusive stores to a local gas station that has little CBD, tinctures at the register. So that's a huge question right now because the FDA really hasn't approved any CBD oils for consumption, but they're still being produced. And so when we're kind of looking at what is the big deal around it, there's a lot of risks with CBD that the FDA just really hasn't been able to get their arms around. So starting off, one of the biggest risks is cross-contamination, and that is with THC residue. A lot of the same manufacturers are producing and extracting both CBD and THC. They're both oils that come from the cannabis plant, from the flower. And so the same machine is used to extract the oil. If they're using the same machine for both, kind of like having food processed in a plant that also produces peanuts, you have a peanut allergy, that's kind of the issue here. It's the same thing. If you're using the same machines, there's THC residue that could go into the CBD oil. There have been some testing done of CBD, independent testing, where people just go in, buy some CBD, and they find sometimes large traces of THC, sometimes very little of CBD, which is what the product is intended to have in it. So that's been a big risk. Also, the distillation process. There are several methods to distilling and extracting the CBD. One of the most expensive versions is the safest versions and the most clean. The least expensive, of course, being ones that can genetically alter the CBD, and then you're not getting the effects that were intended from the CBD. Also, if they're not separating the CBD from the THC, that's when you're also getting more THC within the product. And then there's also other cannabinoids. Cannabis has a myriad of cannabinoids, not just CBD and THC. And so if you're not getting that clean CBD, and that's what you'll see a lot of the times on websites for CBD oils, the more pricey the CBD oil, the more clean, is kind of the perception there. And then a huge risk as well is the cross-pollination. This is a risk that's not just with CBD oil, but also for any hemp farmers and if you're banking them. But we talked about hemp and how the THC production is genetically dormant. However, once the hemp plant, it's typically a female hemp plant that they have because that produces the majority of the CBD oil. They're high producers versus the male plant. But if pollination does occur between the male and the female plant, then that's when the THC is no longer genetically dormant. It just triggers something and all of a sudden THC production increases. And so then if that hemp is being used and it hasn't been tested properly, that CBD oil can have large traces of THC. And then of course, if you're banking that farmer and their hemp becomes marijuana, now you're banking a completely different customer. So that is probably one of the greatest risks of all when we're talking about CBD oil risk, and then even risks with hemp farmers. So we're going to go to the polling question. I definitely want to know my audience, know who I'm talking to, know kind of what risks you're facing if you are banking any cannabis-related businesses. So as the polling question is going up, I definitely want to just, I know Josh had mentioned about questions, but if you do have questions, please post them as we're speaking. I love to make this as interactive as possible, and having your questions come in, knowing what your risks are, your concerns are, really helps me to kind of create this presentation for all of you to make sure that you're getting the value out of it.
And Nicole, something I'd point out quickly, one of our participants on the last question, I think I incorrectly said it. If you have questions, our chat box is not enabled, but you'll see a Q&A box at the bottom. So if you drop it into the Q&A box, we'll see that as things are submitted.
Thank you. Okay, so a large number of you are not touching that risk, so 50%. And then we have hemp only. And then, of course, what we're going to be talking about during this presentation as well is medical marijuana, because that's been a change that's going into effect very soon in July for Virginia. So it looks like some of you are considering serving the medical marijuana industry when that becomes effective in July. Great. All right, going on to some regulatory guidance and regulatory outlook. This here is some data that New Frontier had put out back in 2018 when the Farm Bill first came into effect. A lot of it is assumptions. I do like to share it because I think it's just so interesting. Some of the assumptions that they're making, the estimates, first one being the hemp growth industry, or the hemp industry growth there, the estimates, oops, excuse me. Sorry about that. I think in 2019, it actually reached 1.3 billion. That's what the estimated CBD sales were for 2019. And so for 2018, I believe it was in the millions. It was 1 million actually in 2018. And so they did not expect such a surge, such an increase. But I think just seeing all the CBD retail stores popping up, it's not surprising that CBD sales just skyrocketed. And then you can see there the hemp derived CBD product sales that the estimate at 430 million. Again, just way surpassed that in 2019, and it continues to increase. So, I mean, what we were estimating was going to occur, we just completely blew that out of the water. The 2018 Farm Bill was a huge change for hemp farmers. 2014 is when we saw the legalization under the research and education protection. However, 2018 just opened it up for hemp farmers and then gave them a few protections as well. One of the biggest ones was the fact that they could apply for crop insurance based off of the 2018 Farm Bill. And so that's when we saw a lot more hemp farmers going into business. Then they also, of course, projected that banks would be willing to work with hemp companies. And I'm seeing that more and more institutions are considering working with hemp and CBD related businesses. And of course, CBD became legal on a federal level with the 2018 Farm Bill as well. So the USDA hemp production plan, that went into effect in January. That was something that the USDA had planned to put into effect. It was part of the 2018 Farm Bill. We waited and waited for it, and it finally came out. And then it was finalized in January. And what it did is really provided a lot of guidance, obviously a lot of requirements as well. But essentially a lot of the institutions that I work with that do provide services to hemp farmers and hemp related businesses, they're using the USDA production plan kind of as their playbook, the way that you would with the FFI CBSA manual. So a lot of great information that's in there, very easy to follow as well. But they did provide some requirements for licensing. There's different licensing that we see across states, and we'll talk about what Virginia has in place. But you are required to be licensed for growing and for processing. Basically, anyone who ends up touching hemp needs to be licensed, including the THC testing labs as well. And that's another requirement we have is for sampling and testing requirements that have to occur no later than 15 days before the crop is cultivated. So that is one requirement that when we're talking about programs and controls, knowing what's required of your customer and putting that into your program, the USDA hemp production plan is really helpful for that. And then requirements for non-compliant plants. So what happens when your hemp if it does get pollinated and it does start producing higher levels of THC, or the THC production is just higher, above 0.3%, there are requirements on how you handle that. Very expensive. That's definitely, I would say, one risk when it comes to determining which services that you are going to offer. If you're going to offer any type of lending and you have, of course, the actual hemp plants, if you have to get rid of them, then how are they going to pay you back is basically the concern there. Some notable terms that came out of the production plan. One is measurement of uncertainty. That is required to be on the lab results. So we have the 0.3% requirement, but they do allow for a measurement of an uncertainty. So you can take the measurement of uncertainty, apply it to what your THC is coming in at, and that can give you the acceptable hemp THC level. So for example, if you are coming in at 0.4% and there's a level of uncertainty of 0.1%, then that puts you back into 0.3%. So that if you are collecting samples on your customers, understanding that portion, otherwise you're going to have, probably a heart attack looking at some of the test results if they're over 0.3%, but knowing that you can apply the measurement of uncertainty, and that is what gives you the acceptable hemp THC level. Also, dry weight basis is within the production plan. It's talked about a lot. You'll also see that on the testing results, and that's because the testing has to be, the sample that's taken and the testing that's done has to be on a dry weight basis. So that 0.3% has to be on a dry weight basis. The amount of moisture within the hemp does kind kind of dilute the results, and so they want it on the dry weight basis. And then also the geospatial location, that is where the actual crop is located physically. And so if you have a customer and they expand their production and they, rent some space, or they're leasing space across the street, or buy land across the street, and then they start to grow more, they would have to have a new license. They would have to resubmit and register. So they have to have the coordinates of where the crop is. So just taking a look at the production plan, one requirement, or I guess aspect of the production plan, is it did allow for states to create their own. They have to submit it to the USDA for approval, but a lot of states have taken that stance and are creating their own production plans. And 17 states so far do have state production plans that have been approved by the USDA. 9 states that are pending review right now. And then there's also 24 states. So the majority of the states are still under the 2014 pilot program. So they're not using, so essentially they're only allowing for hemp farmers that are acting under the 2014, the research and education pilot programs. So taking a look at Virginia, the USDA state plan was provided. So you all are choosing to create your own. So you're going to have a USDA approved state level plan. It was received back in February with feedback, and Virginia is currently revising the plan. They do expect to have that in October of 2020. So for the 2020 hemp growing season, you are still operating under the 2014 Farm Bill. And for Virginia, there's 3 available licenses. There's the grower, processor, and dealer. And so understanding what license your customer needs, what type of business they are, how they fall into the hemp industry, should also determine what type of enhanced due diligence that you're performing on the customer, what the expected transactions are. So definitely understanding the different industry types for hemp is key to having a strong program. So this is a map that I always like to include. It's hemp by state. As you can see, there are, outside of DC, there's 2 states that have not taken on hemp, that still have it illegal in their states. And I like to show this because during a program that we had completed in November of last year, I have the map on the left is from November, and then the map on the right is for today. So you can see how dramatic the change has been just since November. So when we're talking about certainly about cannabis overall, but especially hemp, the changes they feel like almost daily. So just keeping track of it and knowing what's going on has definitely been a key issue, I think, for a lot of banks.
Nicole, we have a polling question for you here.
Oh, great.
It's, did we hear correctly that the bank is running the test or reviewing the results as provided for the customer?
Reviewing the results. Yeah, so certainly not running the tests. So in order for the testing labs have to be registered with the USDA. They have to be licensed. So certainly there's no expectation that you're putting a lab in the back next to your Check 21 stash, but and certainly it's not a requirement that the bank is looking at the testing results, but it's definitely a best practice. In one kind of piece of advice that I would offer is that if you are going to look at the test results and you have that as part of your program, that you be very specific, that you're looking at the test results that are required within 15 days of the crop, just because typically the farmers are testing their crop. Most I think are actually testing it weekly. And so the THC results can differ. So having test results that are from April when their season is in July, when they're actually cultivating their crop, would not really provide you with where their THC levels are for their actual product. So making sure that and you only want to collect it once, right? We don't want to do this all year long. So collecting it once, again, 15 days before the crop is cultivated, you want to make sure that that's what's in your policy if you're going to. So we talked a little bit about CBD and what the issues are there. So CBD is legal on a federal stance. What is not legal are CBD products that are meant for ingesting, and then any CBD products that have health claims to them. And so that's what the FDA is kind of fighting back on. There is, a lot of critics will say that the FDA really isn't doing enough. They'll send some warning letters. They'll kind of knock on doors if they get, feedback that there is a CBD retailer, especially with the health claims. They focus in a little bit more on that. But as far as anything that can be ingested by a person or a pet is federally illegal, but there's really not a lot of consequence out there right now for that. And the FDA's stance right now is that they just simply don't know enough about the CBD oils and the effects that it has on individuals. Some preliminary testings do show a lot of liver damage can occur when ingesting CBD. They also don't know the long-term effects that CBD could have. Also, looking at how it interacts with other medications. So that's the FDA stance. That's why it is federally illegal. I do get a lot of questions about, so we have, a gas station or a CBD retailer, what is the bank's requirement for going out and looking at their CBD bottles, seeing if they have anything that could be ingested. Certainly, I don't think that banks need to go out and kind of perform audits of CBD products. If you do have a CBD exclusive retailer, understanding the controls that they have in place, what their stances are. I think anytime you have a customer base that is of higher risk, understanding what their controls are is definitely the first step to having a strong program around them. But as far as how much testing you have to do going out and policing these customers, it's really risk-based and a decision that the institution needs to make. Some institutions do that. They do site visits the same way that you would do for an MSB, especially when it is the CBD exclusive retail shops. But certainly understanding the risks that are posed and making a risk-based decision on what types of controls that you're going to put in place.
Hey, Nicole, we have another question for you.
Great, thank you.
The question is, I have read Virginia's plan to the USDA. It didn't specifically discuss details of testing, for example, the frequency, how many plants, etc., that I saw. Is there a best practice for this, or is there something that the USDA specifically prescribes?
So the USDA does prescribe how much of the crop needs to be tested. And then they're also, when they're looking at the state plans, if the state plan is approved, then you can follow the state plan the way that it is. You don't have to go back to any USDA requirements that they put out. So that's one, I think, a great part about the USDA approving plans. I think the fear at first was the USDA was going to put a plan out, and then if states start to create their own plan, you'd almost be back in a stance of not as torn as marijuana, but still you're still in a stance of, hey, we've got the state requirement and then we've got the federal requirement. Which one do we follow? So for the state requirement, you can follow Virginia's plan. You don't have to worry about it. Also, I would put out there as well, if you are getting the testing sample, again, I would recommend just one, just the cultivation, the 15-day cultivation testing results. You certainly don't, there isn't any guidance outside of that, even on the USDA plan. There's only one requirement for doing the testing, and that is that within 15 days of cultivation. A lot of farmers, again, they'll do it weekly or monthly, however they choose to do it, but that's just to make sure that their crop is is in line and ready for production. They want to know immediately if there's going to be an issue. Instead of spending time and resources, they want to dump their product as soon as possible. So they're doing more frequent testing, and that's just their own internal control. It's not a requirement by the USDA. I hope that answered your question. Here we go. So here is I love my maps. And so here's our marijuana stance by state. I always make the joke here that the US is getting greener every day. So definitely you can see right now, I haven't updated the Virginia, well, this isn't my map, but the Virginia state has not been updated yet because that medical becomes effective July 1st. But you can see for the medical and decriminalization. So right now it's just showing for medical. But it's amazing to me how much this map keeps, again, getting greener. And just to see at what point are we going to get some, federal laws changed if the whole state turns, or if the whole US, turns green, if a lot of states are putting it into place, when we're going to get some, at least some protections from the federal side. It's been very difficult just having, state to state having their own laws in place, and how much, I mean, you can just see, from some of these states, you can easily go from a state that is completely legalized and it's bordering states that not even hemp is legal in. So definitely creates a lot of risk for those states. At least for Virginia, for the most part, you've got some states surrounding that are kind of more in line with your stance, but too much. So taking a look at the legalization outlook, there's signature drives right now in Arkansas and North Dakota to get legalizing for adult use onto the ballots for 2020. And Arizona, New Hampshire, New Jersey, and South Dakota have already received the go-ahead to have it on their 2020 ballot. So a lot of states that we're looking at having recreational adult use being legalized for 2020. And then taking a look at Virginia, we kind of already spoke about a few of these, but decriminalization was approved, I believe it was in April, and it'll be effective July 1st, 2020. So you will have now up to 1 ounce, you have a $25 fine. Anything over an ounce, then you're looking at possible jail time. I believe it's like 30 days and a $500 fine. But under 1 ounce or up to 1 ounce, essentially, you would have a fine of $25. That's effective July 1st. And then for medical use, also effective July 1st, and I believe it was approved in May, you have CBD and THCA-rich medical cannabis that's been approved. There's an approval for 25 dispensaries and 5 processing plants. So we'll see that, and I believe right now registration is already open for patients to get medical cards. So just thinking about how this affects you, even if you are not going to be providing services, you're one of the 50% that said we're not touching that risk. This increases your risk regardless if you are going to be providing services or not. Now you have the risk of the dispensaries and other cannabis related businesses seeking services. A lot of times, because it is such an underserved industry, for obvious reasons, they can try to, kind of sneak their way into institutions just so that they can have banking services. So that definitely increases your risk, again, regardless if you're open to them or not. So just being aware of how that impacts your BSA risk, essentially. And having controls in place so that your account openers know what to look for when it comes to medical cannabis. Another question I think that I received previously was with the cards, the medical cards, would you be willing to accept that as ID? And I think a lot of institutions, and I'm kind of the stance as well, as no, because we don't even want to open Pandora's box. If it's not something you're serving, then you just don't even, want to know, because then are you expected to look at their transactions, knowing that they're purchasing medical marijuana, things like that. So definitely interesting, and would love your all's feedback on what you're thinking as far as accepting the medical IDs. So on the federal side, we did have the Safe Banking Act that was kind of ramping up last year. It passed the House. It's been sitting there. The Senate has not picked it up. We never expected the Senate to pick it up, just because it's not something that the Republicans really want to. They don't even want to discuss legalizing marijuana. It's really not on their docket. But Safe Banking Act kind of got a little bit of reinvigoration, I guess, with the CARES Act 2.0. They slid it in there, so they're trying to get the Safe Banking Act approved. But the Safe Banking Act, there's been a lot of discussion about it being a little, too little, too late. But certainly, I think it would provide a lot of, safe harbors to institutions that wanted to provide banking services to marijuana-related businesses. So one of the first safe harbors, of course, is prosecution. That's one of the biggest, I think, risks from especially from a BSA officer perspective. BSA officers, obviously, they have a lot of personal risks that you take on when you take on that role. And so allowing for marijuana related business to bring funds into your institution, you're accepting that cash. There was fear of prosecution for assisting with money laundering. So essentially, you're knowingly taking in illicit funds, which is supposed to be against every grain of a BSA officer. But if you're into the marijuana related businesses and you're accepting those funds, what does that mean for you? So the Safe Banking Act would have provided that safe harbor from prosecution. It would have also provided a safe harbor from loss of insurance. So again, with the risk of money laundering, illicit funds, an institution losing their banking insurance, of course, was a huge concern. And then also examiner intimidation. That one was so interesting to me just because I haven't heard of examiner intimidation, but I guess it could happen out there. But essentially, a safe harbor provided that an examiner could not come into your institution and tell you that they don't agree with you providing these services to marijuana-related businesses. They can't write you up for just the fact that you're providing services. They have to kind of go in with an open mind and just be able to assess your program for what it is and leave their personal views at home. So that I thought was one interesting part of the safe harbor. And then something that I think we all want, regardless if you're in the space or not, is the development of uniform guidance and examination procedures. So it would have required the FFIEC manual to provide a section on marijuana-related businesses and provide us some well, needed and requested guidance, something for us to go by, because right now I think a lot of banks are trying to create programs based off of the existing FFIEC manual, so kind of going in line with requirements for other higher risk businesses. So for example, just knowing that you're collecting licenses for MSBs, I think that's how, collecting licenses on the hemp and marijuana related businesses, that is, kind of why it's become a best practice and expected, because it's expected for other higher risk businesses that we are checking the legality of them and that they're registered and licensed. So certainly, something that I think would, again, provide a lot of guidance and needed framework, but doesn't, even though it was, kind of slid into the CARES Act 2.0, there's really, it doesn't have a lot of hope right now, at least under the current regime. If there's a change in 2020, then it may be reinvigorated, maybe even some changes. I think one of the biggest complaint with the Safe Banking Act is that it doesn't really provide a safe harbor for credit card processing. So you're still left with that high risk of cash. So that is another, even if you're okay with the risk of banking a marijuana related business, even though it's federally illegal, there's still, how do we just can we even handle all of the cash that they would be bringing in? And certainly, while they have found some ways around it, it's still primarily a cash business. And so that's a huge risk that banks take on, especially if they don't have the cash vault services or other services to really be able to support such a high cash industry. All right, so we're on to our second polling question here. And this one is about your preference for resources for guidance on cannabis-related businesses. So the majority of you are coming in with peer groups, which I see all the time. I love the 17% of you that went for Willie Nelson. I definitely, call him every time I get a question. But another one for, the High Times Magazine, while it was to be funny, that is something that definitely, if you're considering or if you are providing services to the marijuana industry, there are a lot of free resources out there. Marijuana Moment, free plug for Marijuana Moment, is one that is in my inbox every morning. And it just kind of, not only does it give you legislation updates, but also just kind of what's going on in the industry. As we know with, know your customer, if you're going to be providing services, you have to know your customer. You have to know what their industry looks like, what some of the issues that they're facing, some of the legal ramifications that they're facing as well, even outside of banking. So just giving you those resources out there to get to know the industry and to be able to serve them. So FinCEN back in 2014 did give us some guidance on banking marijuana related businesses. And then they had that quote out of the guidance that it should enhance the availability of financial services for and financial transparency of marijuana related businesses. I think with FinCEN, we've always seen a push from them. They've never kind of had the stance of being against, about de-risking and not providing services. I think they've always been on the stance of we want the data, we want the information, regardless of how anyone feels about the industry that's being served. We know what's happening, and so we'd rather have the data on it. And so I think this was FinCEN's attempt to at least give some guidance so that banks could feel comfortable if they were on the edge of kind of teetering of whether they were going to provide services or not, give them a little bit of a roadmap, and of course, give us some guidance on SAR so that they could collect that data. And they're collecting as much data as they possibly can when it comes to marijuana related businesses. So how can financial institutions provide services to marijuana related businesses? Number one, and I say this, taking a life of its own. Here we go. So first of all, of course, assess your risk. It should be in your risk assessment, the fact that you're going to provide services to marijuana related businesses. And then I often see a cannabis related risk assessment. So it's really focused on cannabis related industries, assessing your risk, determining what those risks are to your institution. And that's a way to kind of cut out the noise. I'm a huge fan of risk assessments just because it really is, as it's meant to be, it's a framework to your program. So being able to assess your risk, determine what is the risk to the bank, and then build your controls to mitigate those risks. And that will help you, again, to kind of cut out some of the noise. Do we do site visits? How much of, sampling, not sampling, I mean, if you want to sample, go nuts, but how much, should we be doing policing our customers? That risk assessment should really kind of set the stage for you and the controls that you're going to put into place. Of course, customer due diligence. They did talk about state licensure and registration. So again, that's how that, also kind of just firms up that best practice. And again, with the customer due diligence, knowing your customer, knowing the different types of businesses within the industries and what the related parties are, what their expected activity is. Of course, to know if it's suspicious or not, you need to know what's normal, what they're doing, what products are they selling, who's their customer base. That should all affect the risk of the customer. You can have marijuana related businesses that are low risk. It's just a matter of knowing where the risks are and knowing where your customer falls. And then of course the suspicious activity monitoring. They did provide red flags within that guidance, so certainly something to take a look at. So within the red flags, was there a question, Marissa? Sorry, I thought I heard you start.
Not a question, more of a comment, and I think it speaks to how you're saying that the guidance is always changing. Someone said that there was some guidance that came out this morning from FinCEN regarding the due diligence requirements.
Yes, I did see that, but I didn't have a chance to go through it. But yeah, I'm excited to take a look at that. Thank you for sharing that too, for anyone who wasn't aware of it. For some reason, Marissa, every time we talk, my screen starts jumping and I can't get it back. Oh, we're going forward. Josh, I'm not able to go backwards for some reason. Oh, wait. Nope, I got it. Maybe. There we go. Thank you. So a lot of those red flags that came out, they were really reliance on the Cole Memo priorities. So the Cole Memo came out and gave us priorities, including things like not selling to minors. So really just what the Department of Justice was going to be focusing on as far as their initiative to looking at marijuana related businesses. So FinCEN's 2014 guidance gave us 3 SARs that would have to be filed. The first one being marijuana limited. If you have a marijuana related business, and again, it's not just a dispensary, not someone who's just touching the marijuana, it's also someone who's accepting funds from a dispensary, for example. So someone who produces plastic containers and sells them to marijuana dispensaries for them to put their product in. That's a marijuana related business. So there are different degrees of that, which we will touch upon. And I realize that I'm kind of running out of time, so I'll try to get a little quicker here. But we have the marijuana limited, marijuana priority, and marijuana termination. Those are the 3 SARs that are required. I want you to take really note of the marijuana termination, whether you're providing services or not. This is still required of you. So if you find that someone slipped through the front door, someone opened an account, and you find out that it is a marijuana related business, and then you terminate them, you have to file this SAR on them. And within the narrative, you want to use marijuana terminated. So that unfortunately is a finding that I do see when I'm performing audits of different programs who are not providing services. So for the Cole Memo priorities, it listed eight priorities. When I say gone but not forgotten, it's because it was rescinded in 2018. There was huge, concern over, hey, the DOJ kind of gave us this protection of, hey, we're really only going to be taking a look at, violations of the priorities, and that's what we're going to be focusing our attention on. But it's still in the FinCEN guidance. The FinCEN guidance has not been rescinded, so it's still kind of keeping the Cole Memo alive, if you will. And then looking back at the DOJ cases as of December 2019, I think there was an estimated 50 cases centered around marijuana-related businesses, and none were outside of the priorities. So even though the Cole Memo was rescinded in 2018, it still seems to be very alive and being followed. And then taking a look at the cases, bribes were a recurring theme, whether it was bribes for licensing, getting bank accounts, different things of that nature. So I think there was an insane amount of bribes. Maybe like 80% of the cases were all bribe related, but nothing outside, again, of the DOJ priorities. So what is FinCEN doing with the marijuana, all the marijuana SARs and the data that they're getting? They started giving us some updates, and here's one of the updates that they give us is based off of the banks that are filing priority in limited SARs, not terminated. Here's how many institutions they believe are providing services to marijuana-related businesses. I wish they provided this information by state, but this is what they gave us. So I guess we just have to be happy that they gave us anything at all. But just to see that if you are providing services, you're not alone. And then taking a look at the breakdown, I didn't spend too much time explaining the difference between limited and priority, but limited it means we're banking a marijuana-related business. Everything looks kosher. I don't see any suspicious activity. They just are here. You need to know. And then marijuana priority is where there is suspected suspicious activity, including the DOJ priorities. So taking a look at that, there were just over 122,000 SARs filed, and 70% of those were non-priority. So just kind of this gives you a little bit of a flavor of, there is SAR filings, and that's definitely, when you're looking at resources, if you're going to be providing these services, this is something that, the SARs are required regardless. Again, even the marijuana limited SARs are required to be filed continuing. So definitely something that takes up your resources, but this can, again, give you a little bit of flavor of what they're seeing. I think a lot of marijuana related businesses are doing the right thing. They're following protocols. They have a lot of controls in place that are in line with the DOJ priorities. For that one example I gave you about selling to minors, a lot of dispensaries will collect ID both at the front door and then during the sale. So understanding the controls that the business has in place definitely helps for you to mitigate your risk as well. So here we are with our third polling question. Definitely, I didn't cover this, but I just wanted to kind of see if anyone knew, does THCA have psychoactive properties? Okay, so the question or the answer is THCA does turn in to THC. The second answer about the molecular structure is true as well. So THCA, if you were to take that in, does not have psychoactive properties, but THCA does turn to THC. And so that is something when you're looking, if you are looking at testing results, you'll see that they're testing both THCA and THC because they're including the THCA content in that 50-day testing just to see what they can make a better assumption of what the end result of the THC is going to be. And so you'll see that in the testing results. So you want to be able to look at some testing results will separate it and then it'll have a total THC kind of at the bottom. So you want to make sure that you're looking at the total THC, not just the THCA percentage. You're looking at the percentage of total THC, which includes the THCA. So I just wanted to put that in there. Okay, so I think I'm over time right now, or just about to be. But when you're looking at a cannabis program, I think I kind of already was on my soapbox about identifying the risk and developing the controls, but making sure that you're documenting everything. I listed here for you some of the points to be considering in your cannabis program. So this is if you're going to be providing services. If you're not providing services, this is still your program. So just making sure that your policies and procedures have your bank stance that you're not providing services. Certainly make sure that you're considering the types of MRBs. There is a kind of industry accepted 3-tiered approach that I think MRB Monitor came out with, where it is your first tier are they're touching marijuana. They are your direct marijuana related businesses. They're the dispensaries, the growers, the processors. The second tier are those that I talked about that receive funds from a tier 1. So they're creating a product or a service, and a significant portion of their customer base are your tier 1 MRBs. And then your tier 3 are your supplemental. They're kind of like the tier 2s, except it's not a predominant part of their business. Maybe it's an attorney that has one client, that is a marijuana dispensary or something like that. But the majority of their business is outside of that. Maybe they just had one, that they helped with, like a real estate transaction type thing. But so those are kind of the 3 tiers. So knowing which ones you're going to service, whether you know it or not, you're probably servicing at least the tier 3s, if not the tier 2s as well. So just making sure that you have controls in place within your program, especially if you're not banking them. How are you identifying that? Do your account openers know? How are you monitoring for any changes? And I always make this joke because for some reason the potato farmers happen to be, it must be the soil or something, or the equipment that they use, but a lot of potato farmers have switched to hemp. So if you've had a long time farmer that's been your customer for 20 years, what are you doing to know that they are going to switch? That's typically not a high risk customer, not someone that you're doing site visits on. So how do you know that they switched if they didn't tell you? So making sure, especially in Virginia, especially with the changes that are happening in your state, what are you doing to make sure, especially if you're not providing those services, that you're able to detect if something does go through your institution? Making sure that you have procedures for the terminated marijuana SAR, making sure that you have your due diligence in place. So with that, I am over, but certainly if you have any questions, as you can maybe tell from the last 50 minutes, I really enjoy talking about this. It's kind of one of those things where I have like all this information in my head, and it's useless unless I'm talking to a client, to a bank that it is providing these services. So by all means, reach out to me. I can go over any slides that I really wasn't able to dive into. But if you have any questions about your program, I'm happy to discuss those with you.